Hey guys, Courtney Epps here again. I am super excited and I want to just share with you just for a couple minutes. I have been giving, for those of you that know me, for the last couple years to a nonprofit that is very near and dear to my heart. And I want to share with you a video by Sam Castor. He is the founder of Man of Relief, and his life legacy is to be able to eradicate childhood malnutrition. And to a point that 6 years ago, he decided to walk away from the company that he built, a multi-$100 million company that was publicly traded. And he decided to connect and realign with some companies that were willing to do a buy one, give one model. And so what that means is that they're willing to take for every product or every dollar that they're spending, that they're going to provide a serving of whole food, plant-based nutrition to children in need. So it wasn't enough for him to be able to feed and provide nourishment for 50 to 60,000 children every single day. He wanted to eradicate that. And that takes 6 million children every single year die of malnutrition. So I want to share with you just a video really quick. I thought it would be much better if I get him to consolidate it into a video, because me and him get to talking and life just kind of gets in the way. So I'm going to share this with you right now. And to a point that 6 years ago, he decided to walk away from the company that he built, a multi-$100 million company that was publicly traded. And he decided to connect and realign with some companies that were willing to do a buy one, give one model. And so what that means is that they're willing to take for every product or every dollar that they're spending, that they're going to provide a serving of whole food, plant-based nutrition to children in need. So it wasn't enough for him to be able to feed and provide nourishment for 50 to 60,000 children every single day. He wanted to eradicate that. And that takes 6 million children every single year die of malnutrition. So I want to share with you just a video really quick. I thought it would be much better if I get him to consolidate it into a video, because me and him get to talking and life just kind of gets in the way. So I'm going to share this with you right now, and we will get started. I am super excited to share with you the one and only amazing Sam Castor. Hold on just a second.
Founder of Man of Relief, a global relief organization that provides advanced immune support to the world's most vulnerable children. For over 20 years, I've been involved in the research and development of immune-activating ACE-mannan technologies. ACE-mannan is the uniquely structured polysaccharide in the fresh gel of the aloe vera plant, responsible for its rich history as the world's best-known plant for supporting the body's immune system functions of defense, healing, and repair. ACE-mannan was discovered and stabilized in the mid-1980s, resulting in the issuance of over 150 worldwide patents. Over $100 million has been invested in ACE-mannan research to help define its unique mechanisms of action in immune system support. In 1994, I licensed the exclusive rights to this patented extract and created global distribution systems for ACE-mannan that included Man of Relief. When children are undernourished, their immune systems become suppressed, making them more susceptible to every kind of chronic and infectious disease. In areas of the world where medical support is limited or non-existent, turning on a child's immune system can become their best hope for survival. Our bodies depend on early recognition functions of the immune system in order to prevent the adhesion, penetration, and replication of viruses. But viruses can also mutate, which help them develop a resistance to antiviral drugs. This has spurred the search for new antiviral therapies. Analysis of medicinal plants has revealed a plethora of antiviral properties. Saccharide fractions of plants have shown to be some of the most important of these discoveries. Mannose-based polysaccharides, ACE-mannan, have in particular been shown to aid the body's immune system's ability to destroy viruses through macrophage interactions. Macrophages are cells in the immune system that orchestrate all of the immunomodulatory functions of defense and repair in the body. Macrophages provide the front line of defense against viral infections. ACE-Mannan is a potent macrophage activator with the ability to affect viruses through a wide range of actions and mechanisms. Viruses will always present a threat to human health. Your body will respond in one of three ways if you get exposed. Number one, you will remain asymptomatic. This means the virus will come and go in your body and you won't feel a thing. Number two, you will express flu-like symptoms before your body defeats the infection. You know, sore throat, fever, mucus buildup, and a variety of aches and pains. Or number three, the viral load will build in your body and cause secondary infections like pneumonia and septic shock that can cause a shutdown of your glands and organs. These secondary infections can be fatal. So how will you respond if exposed will be in direct proportion to the functioning of your immune system. Those with weakened immune systems due to age, medications, or pre-existing health challenges will be at highest risk. So, keeping your immune system properly supported is one of the best strategies we have to face whatever the future may bring.
Courtney Epps, again, I just want to share with you, you guys, Mana Relief is one of the most amazing nonprofits that I've ever been involved in. And I'm heavily involved every single day with feeding children. And today, I'd love to share with you the fact that we're actually feeding almost 8,000 children every single day the products that are actually building and supporting their immune system. So what you just heard from Sam is that our bodies can fight against sickness and disease if and only if our immune system is actually supporting that fight. So I wanted to share that video with you to just kind of help you understand. So many people don't understand that there are malnutrition, there are malnourished children everywhere. There's malnourished people everywhere. And a lot of it's based on what we eat, what we put inside our body, the drugs that we take, and we actually get sicker and sicker. And so that suppresses our immune system so that our bodies cannot fight. And so what we're doing with these children is we're actually providing them with one of this product and multiple others, daily vitamins, omega-3s, endocrine support, and actually helping. And we're sending that not only to medically fragile children here in this country. So if you know any child who's medically fragile, please reach out to me because I'm the one working on that program all over the entire country. It doesn't matter what they have. We just need to know what they have. We need an address, and we will provide those products and nutrition for those children. So make sure you reach out to me on that. And one of the things that I will be posting is just a link for you to give to the nonprofit, to Mana Relief. If it's something that's on your heart and you feel like you want to give, then I would love for you to be a part of giving back to Mana Relief. And I will actually post that here in the links for you in just a few minutes. So that leads to my story. It is my time in order to share with you some information. So I'm going to just jump right into it and pull up my presentation here. Everybody knows me. There's no need in introducing myself to the world here. I think everybody knows who I am. I'm Courtney Epps. I've got 6 kids. I'm kind of crazy at times. And, and we have a full service accounting firm here in Greenville, South Carolina. I think that's about as much as everybody kind of needs to know. This is my family. They range from 18 to 7. And I have 5 teenagers right now. So it's super crazy. But I just love helping people. One of the things that Sean said, it really got me, is that I am focused on ending suffering in people because things happen in life. And, whether through lack of communication or whether through misunderstanding, that can cause people to be in a lot of in a bad place, emotionally, mentally, and financially. And I believe truly that God gives me things and allows me to help other people with those, because I'm willing to open my mouth and just share. So, I tell people things. I've had people say, well, I wouldn't want to tell someone that I filed bankruptcy, or quite possibly that I couldn't afford to file bankruptcy. But at the end of the day, here's the thing, is that that's what allows people to understand and trust me. And I am a living, breathing proof of, if I can do it, you can do it as well. So I'll just get started. I'm not going to go into full detail on a presentation and teach. I want to teach some things, directly from the heart. But one of the reasons why I decided to start sharing this information with people is that, one, I wanted to be able to save people more money. I wanted to be able to free up money in taxes. And what I realized is that the average person, the average household, doesn't know the information that I'm going to share with you today. And here's the issue, is that the average household in America is literally 60 grand a year, and they're paying $14,000 in taxes. And so here's the problem with that. The take home is $46,000, and the cost of living in America on average is $53,000. So that means that the average person is going in debt $7,000 a year to work 40 hours a week, 50 weeks a year, to take 2 weeks paid vacation. And I wanted to help fix that problem. And fortunately, I got involved in the network marketing industry. I'm not in network marketing now, but I got involved in the network marketing industry for about 3.5 years. And I did over 900 tax returns for people in that industry. And I was able to share with them what they were making before network marketing or their home-based business, because it's really irrelevant whether it's network marketing, home-based business, whether you want to do blogs, whatever. And I was able to show them how they could go from being in debt, right, losing money every year, to actually saving $4,000 to $7,000 a year, and most of the time it's $4,000 to $8,000 a year in taxes, in order to just have some sort of home-based business. And so that really excited me, because here's the thing: as an accountant, as a tax preparer, I went to college. Nobody told me that home-based business was legitimate. I was actually told the exact opposite. No one told me, and I was actually told that you couldn't have a loss more than 3 out of 5 years. And then you find out, well, Jeff Bezos with Amazon had losses for 20 years. So the things that we learn in college as tax accountants and preparers is not necessarily to be in the best interest of the client, and it has nothing to do with strategy. So that gets me to a place to help you understand, why is there a difference between having a home-based business? Well, in order to know that, you've got to understand there's 2 tax systems in our country. There's one that was created to provide wealth for you, and there's one that was created to steal away wealth. And it's not the rich or the poor system. It is the W-2 employee system was created to steal your wealth away, and the business owner tax system was created to provide wealth for you. And the reason why is because business owners generate economy. They're the ones out every single day running companies. They're spending more money back into the economy, growing their business. And then the hopes are is that one day they'll hire employees, and those employees will then pay the taxes. So if you are just a W-2 employee and you're listening to this, you will pay on average in your lifetime more in taxes than you will on food, clothing, housing, and transportation combined. See, that's crazy. And there's a way to fix it. The only thing you have to do is find something you're passionate about, share that with someone. Find a company, find an affiliate company, a network marketing company, a sales organization. If you want to create a blog, you want to do landscaping, whatever it is that you want to do, you just need to find something you're passionate about, start sharing that with people. And just by sheerly doing that, now you can move into the second tax system. So here's the thing. I truly believe that everyone would be brain dead not to have some sort of home-based business. It makes no sense for you not to have one. And here's what I do is I work alongside typically speakers, coaches, trainers, network marketers, and I free up money. I free up money so they can get started in your opportunity, or I free up money so that they can get the sales skills that they desperately need in order to grow their business. So that's what I do. So I help attract people into an industry that they may not otherwise see as a viable opportunity for them. I help them keep more of their hard-earned money when they're making it. But here's the key, is keeping them in long enough to win. And that truly is the key. If we just stay in long enough and we get the skills that we need, people will become successful. So that's what I'm all about. And I do it through tax savings. I don't do it through necessarily making more money, because I know the guarantee is the tax deductions around it. So here's the thing. 46% of Americans did not have an extra $400 to their name prior to the pandemic. And 69% of Americans didn't have an extra $1,000 to their name prior to the pandemic. And that's what really hit me hard, is that there are some people out there that can't even see, they can't even fathom that they have an opportunity to get ahead in life, because they don't even have a couple $100 to get started in an opportunity that they know could potentially change their life. And so I'm adamant about helping people do that. And you can actually, if there's something you really want to get started in, one, we could help you free up the money and see the opportunities. But the other part is that increasing your W-4 exemptions at work can actually increase a couple $100 a month, so that you can spend money on growing a business instead of spending money in taxes. So don't be brain dead, okay? That's my big key here. And I want to break it down for you so you actually see. I don't want to spend a lot of time on it, but those statistics I share with you, that the average household was making 60 grand a year, and they're paying taxes and their take home and their cost of living. I broke this down, and I wanted to even make it more understandable for you. So here you see that it's about $4,000 in the hole that the average family is going into debt. So you've got a single person. I just lowered the cost of living for them so it would make more sense. And then you've got the married person, and they're still going in debt $4,000 a year, and they're working every day. Well, here's the issue. You can fix it, but the national debt, I don't know if you guys have ever looked it up yet, but you can go to usdebtclock.org. And if you go look that up, it'll tell you right now that the average citizen in the United States is in debt $80,000. That is every man, woman, and child. And we can fix that first and foremost by, one, getting personal growth and development, the continuing education, understanding how to grow a business, right? And then taking that business, freeing up enough money so that you can get started. And then from there, now it's the double whammy. So you're making money, but you're also paying less in taxes. So it makes total sense to me. So here's what happens. A W-2 employee with a home-based business changes everything. It shifts everything. And so in order to first and foremost go into detail on what can we write off by being a business owner, we need to first understand what the IRS says is a tax deduction. And a tax deduction is any expenses incurred for the purpose of gaining or producing income. It's incurred with a reasonable expectation of resulting in future business, and it's reasonable under the circumstances. So what that means for you is that you can actually redirect your living expenses and turn those into business expenses by having some sort of home-based business and doing what's called daily business building activities. What that means is you're spending 3 to 5 days a week for 45 minutes a day growing your business, whether that's reaching out to people and telling them what you're doing, having a sit down with your friend and saying, hey, I'm in this business, or flying over to see Sean in New Jersey and having a mastermind for the weekend. That is truly growing a business and connecting with people there. So what happens is when you're a W-2 employee, we all have living expenses and we have itemized deductions. So many people believe they're getting a massive benefit from itemized deductions, but 96% of Americans are getting zero benefit from it. And the reason why is because there's caps. So when you have medical bills and medical insurance, you can't claim all of that. You have to you can't claim more than, you have to go above 7.5% of your AGI in order to get any benefit. Meaning that if you made $100,000 a year in your adjusted gross income, 7.5% of that is $7,500. Well, if you had $10,000 worth of medical bills, guess what? You're only getting a $2,500 tax deduction. So most people have no clue. Now, property taxes, real estate taxes, sales tax, all of those are combined and lumped into one $10,000 cap. So you can only get that benefit from there. Then you've got mortgage interest and charitable contributions. Charitable contributions are limited to 50% of your income, so you can't claim more than that. So when you add those together, you may or may not ever go above the standard deduction, which is $24,000 if you're married or $12,000 if you're single. So I want to help you get some of those back, and you'll see how this works in just a minute. But we can all agree that we all have living expenses, right? We have auto expenses, cell phone, travel. We have products that we buy. We have daycare, if we have young children, office supplies, home expenses. We have all of these things. And a lot of people use personal growth and development, and they love it. The thing is they're getting no benefit if they're just a W-2 employee. So when you're a W-2 employee and you have a home-based business, the deductions the expenses are the same. It's just now you deduct them. So I'm giving you numbers. These are not minimums. They're not maximums. They're just averages of what I see on a daily basis on expenses that you can write off. So things like medical bills, you can actually hire your spouse. Your spouse can pay 100% of the medical bills. You can then reimburse him 100% for the medical bills, and that becomes a fringe benefit, and that's 100% tax deductible. Medical insurance. If you don't have medical insurance through your employer, that is also a 100% tax deduction. So even if it's through like Liberty Health Share, Medishare, things like that, that can be written off. Property taxes. This is, it could be for vehicles. It could be for RVs that you drive around the country and go see people. We just recently bought a toy hauler for our family. And we're actually, one of the things I love about the toy hauler is that it has a party deck on the back. So I can actually, park. I can tell people where I'm going to be at, and I can do presentations or speaking engagements from my party deck, and then I can sell backstage passes. So that is a 100% tax deduction for my toy hauler. Give it up for the toy hauler. Super excited about that, and I can spend time with my children and do the things that I love to do. And so it's pretty amazing. Property taxes can be tax deductible. Business use of home. So most people think the business use of home actually triggers an audit. It does not. In 19 years, I've only ever had one client audited. And I would say 75 to 85% of my clientele are network marketers, and they claim business use of home on every single tax return. And I've never had a client that was actually audited for business use of home. And I've only ever had one client audited in 19 years. So that myth, let's just throw that one away and forget that ever even existed in someone's mind. Business use of home, you can write off a portion of your utilities, your insurance, your property taxes, your mortgage interest on the home, and you can also depreciate the home. And one really good fact that most people have no clue about is that you can write off repairs and maintenance. Plus, you can actually deduct the square footage of closets, common areas, and hallways in order to get to a higher percentage of business use. And here's the kicker, and I want to share this before I forget. If you have a home, and let's just say you decided to put a pool in because you have employees who work on your property who also happen to be your children, and we'll talk a little bit more about that in a second, that swimming pool can actually be a 100% tax deduction as a fringe benefit. On top of that, you can do things like athletic facilities, or you can have a gym at your home. And as long as you have employees that work there, you can actually write that off as well. And I'll explain that when I talk about hiring your kids. So charitable contributions, one of my favorite things to talk about is giving money away. And if you do it in a certain way, you can actually take full advantage and be able to claim 100% tax deduction. As I talked about earlier, charitable contributions, if they're not given properly, they flow to your itemized deductions, and 96% of Americans get no benefit from that. So the next up is meals. So if you're going out of town to talk to someone about your business, if you are going to a continuing education event, if you are just seeing someone here locally to share with them what you're doing and to talk business, then that would be a tax deduction for you. And you can write off 50% of your meals. If you're out of town, you can actually write off $55 a day in per diem as well. And then you have miles. So mileage, you can either write off actual expenses, or you can do a standard mileage rate. The standard mileage rate is 58 cents a mile. You can't depreciate or take any extra expenses on that. That's considered to be the standard mileage rate, and it's the easy way to write off your mileage. You can also write off actual expenses, and actual expenses include gas, oil changes, interest on the car, property taxes, insurance, all of those combined. Plus, you can depreciate the car. So if you have a newer car, you're almost always better off now with the new tax law changes to take actual expenses, especially if you use the vehicle more than 50% of the time. But in this scenario, we're talking about someone who was a W-2 employee that became a W-2 employee with a home-based business. So they're not typically spending more than 50% of their time using their vehicle for business purposes. So you would take the standard mileage rate. Things like cell phone. Cell phone is a tax deduction. So if you spend 90% of your time building your business on the phone, you'd write off 90%. If you're spending 50%, you'd write off 50%. And that same holds true for internet and office supplies as well. So we'll talk about that in just a second. But office supplies are another huge deduction that you can write off. But travel is my favorite when it comes to being able to spend time with my family and combine a vacation as well into you building a business all at the same time. So if your intent of going on a trip is to grow your business and you happen to have fun along the way, that's a tax deduction. But if your intent is to go on vacation and you happen to do business along the way, then that's limited, the amount of tax deductions that you get. So keep that in mind when you're traveling. So you could travel to go see a potential prospect, upline, downline, sideline. You could go to a mastermind event like I did this weekend up in New Jersey with 60 business owners. You could fly to look at a property. You could actually go and do research on other people in your industry and what they're doing in order to grow their business. So all of that can be covered. And one of the things that I really love about the network marketing space, just in general, is that it makes it super, or actually sales, in general, is that you can have the ability to go anywhere and build a business with anyone. And that makes a lot of sense because I have clients in all 50 states. And so for me, I can go to any state. I can pick up the phone and call a client and say, hey, I'm coming. I'd love to get with you. And while I'm there, I can do all the things I want to do that are fun, as long as I'm spending more than 50% of my time doing business building activities. So pretty awesome. And then when you hire your kids, guess what? You can take them with you. So you hire your kids to do things that you could hire someone else to do. And by doing that, now you're not only hiring them, but you can also write off fringe benefits for them. So that swimming pool we talked about, you can actually help pay for college and that not be tax deductible for them. And you get to write it off as a tax deduction as well. So there's lots of reasons you'd want to hire your kids. But one of the biggest things for me is that I can take them with me around the country. I can enjoy them. I can have fun with them a couple days on the front end, a couple days on the back end, and it's all a tax deduction. So, office supplies and legal and professional fees. Legal and professional fees are things like me, or you have a coach, or you hire someone like, let's just say Sean Callaghy, for instance. He does one-on-one coaching. That is a tax deduction. So coaching, consulting, professional development, all of that can be included, as well as if you need an attorney to set up an organization or paperwork for your business. If you needed to set up, like we do LLCs and S Corp elections, tax strategy sessions, all of that is included and 100% tax deduction for your business. So if you will look here, you'll see that none of these expenses are extra. They're part of your day-to-day living expenses, and there's even more. But I don't want to go into full detail on that because there's 475 tax deductions that you can actually take advantage of. But here's some extra expenses. You may have some advertising that you want to spend. And, in the beginning, you may not necessarily spend money on advertising, but that's a tax deduction. Continuing education. Guys, I will tell you that the number one thing that I spend my money on is continuing education. And the reason why is because if I'm growing myself, if I'm growing my mindset, then I can make more money and I can make more impact. Because I'm not in a place today that I focus on how much money I'm going to make and that I'm going to bring in the door. But I do focus on that number because that's directly related to my impact. And that'll make sense when we talk about with social business and social giving. So continuing education is what has grown our business 10x, every single year for the last 3 years. And you should put some time and effort and money into growing your mindset. Now, dues, you may have monthly dues like a Zoom, for instance, StreamYard, like those are considered dues, or they could also be considered software. If you're in a company that charges you monthly for, different, like your website, all that stuff would be considered dues. And then you've got cost of goods sold. So, I'm an accountant, but I'm an accountant in the network marketing space is a lot of my clientele. And so my products that I buy from you guys actually are tax deductible for me. For me, it's advertising because I'm growing my business and I'm connecting with leaders in network marketing space. So I'm attempting to earn income today or in the future. That's what the IRS says. Now, for you guys, when you are selling a product or a service, then that is cost of goods sold for you. But also the products that you're taking in order to tell people about that can be considered either research and development. It can also be considered advertising. And then the products that you give away, those are samples. And you can actually, those are all tax deductible for you. So you can see here, we have $35,000 in tax deductions. And we haven't even gotten through the surface. Like that's just surface level deductions. And I don't even want to use that number because so many people, they just have no clue. Like there's no way in the world I have $35,000 worth of business expenses. Well, the thing is you don't necessarily have those business expenses. The deal is that those are living expenses. Now you get to deduct them. So let's just use 25,000 as the base. And you can see here, if you didn't make any extra money in the business that you're in, you had the same 60,000 income, same business expenses, the 25,000 that we're now writing off. Now here's our taxable income, our taxes, our take home, our cost of living, and here's what's left over. You're actually ahead. The difference is $5,600 if you're single, $4,500 if you're married. And that, guys, listen, if you're a W-2 employee, the savings that you would get by just having a home-based business and attempting to earn income, whether you make $1 or not, now allows you to have a paycheck increase. So this is what it would look like. It would look like you made an extra $3.79 per hour for every hour that you worked, 2,000 hours a year, 40 hours a week, 50 weeks a year. Crazy. And then if you're married, it's $3.05 an hour. So the fastest way to wealth is to save and keep more of your hard-earned money. And then let's go in the direction of starting to make money. So here's what happens. Now, let's say we made an extra $500 a month. Okay. So that's $6,000 a year. Well, here's the great part. That $6,000 a year, you're still showing on paper that you've lost money for your business, but you haven't lost money. You've made money. Okay. So here's what happens. Now, here's our taxable income, our taxes, our take home, our cost of living. And here's what's left over. You're bringing home a difference of $10,500 a year. If you're single, if you're married, it's $9,500 a year. You would have to make an equivalent of an increase in pay of $7.03 an hour if you're single and $6.48 an hour if you're married in order to be equivalent to an extra $500 a month. So I want to share with you, this is a story. This is a real life story. I had a client come to my house last year. This was before I moved into a facility. We're now in a 6,000 square foot facility. Super excited about that. But one of the things that I was so scared of is that because I lost a business in the past, I made one wrong decision and I put my business up for sale. I was scared to death to have an office. So I continued to have my office out of my home for 9 years. And there's so many amazing things that go along with that. I've been able to homeschool my 6 children and be with them every single day. I've just been able to live an amazing life with them. And I've been able to travel with them and do the things that most people, when you have a brick and mortar traditional business, you cannot do. And so I had a couple come to my office. And sorry, I'm getting emotional about that, but it's just the biggest thing. Like so many people, their focus is, I want to get an office. I want to, I want to look big. I want to, I want to do all these things. My focus is to get back home so I can be with my children every single day. See, people don't realize how beneficial it is. So I went from having a brick and mortar business, working 100 hours a week, Thank God that man took that business away from me. Thank God he stopped paying me. Thank God I woke up and I realized that being able to be at home and building a business with your 6 children and your husband and your dogs and being able to do the things you want to do when you want to do it, that is more powerful. That is true freedom. And so I went from having a brick and mortar to being at home and now having a brick and mortar again. And so I just want to get back there. And that's what I'm focused on every day is how to be a business owner and not be a business operator. And I'm getting really, really close. So I'm super excited. But here's the thing. I had this couple come to my house, and when I had an office in my home, one of them made 80 grand a year. The other one made $55,000 a year. So the total of it was like $140,000 combined is what the two made. And they wanted to know how much money they were going to have to pay extra in taxes because they got a $35,000 pay increase. And we determined that they were going to have to pay in $22,000 of the 35 in taxes because it was putting them in a higher tax bracket and they didn't have any deductions. Right? Because when you're a W-2 employee, you don't get the deductions. So here's what ended up happening. I said, you know what? Here's the thing. Like, you're only going to bring home $13,000 out of the $35,000 pay increase. This is crazy. And I said, while you're here, let me do some figuring. And I just want to see what it would be like if the $55,000 went away and we just kept the 80. And we determined that the $55,000 was only generating an additional $21,000 a year into their household, which was $1,800 a month. I was shocked. I'm sure like my mouth just hit the floor. I'm like, oh my God, like $1,800 a month. Like, you can do anything for $1,800 a month, and you think you're making $55,000 a year, and you're not, because of taxes. And when you understand this tax system, it becomes fun and it becomes a game. But the thing is that being a W-2 employee, you don't get the benefit to be able to take the tax deductions that we do as business owners. And rightfully so, is because we're generating more employees over and over and over again. So I told him, I said, look, if you just stayed at home, if one of you stayed at home, the one that made 55 grand a year, you would need to make $1,000 a month. And just by making that extra $1,000 a month, that would be equivalent to the bring home for your $55,000 a year in a paycheck. And the reason why is because she's decreasing expenses. She's saving more money in taxes. And on average, let's say there's $25,000 in deductions. If she made 12, she'd actually have $13,000 worth of expenses, losses on paper, just on paper, that would offset against her husband's income, put them back in a lower tax bracket. They would actually be paying less money on his money and her money as well, and they would be better off. And there would be one person in the household actually being at home with their family. And I think that's what we need today. And I think that's why 40% of Americans that made under $40,000 a year lost their jobs. And so it's a wake-up call for people to see, gosh, something has to change. We have got to make a shift. And so, guys, if you understand the tax laws, if you understand how this tax system works, you will try your best, do everything you possibly can to shift from being a W-2 employee back to being a business owner. So, and I'm not knocking business owners. I just want you to understand you're always going to pay more taxes. You're going to pay on an average of 40% in every dollar you make in taxes, as opposed to a business owner who, we can make hundreds of thousands of dollars and never pay a dollar in taxes. And the reason why is because the taxes we're focused on growing the economy. And we're focused on hiring employees. So a couple things, and I'm almost done with time, so I'm almost running out. So hiring your kids, this is a big deal. You hire your kids, they're expensive. Pay them, and then they pay for the things that they want. In this situation, what I do is I hire my kids. They work for me. One is a personal assistant. One actually is a tax preparer. They help us do bookkeeping. They create invoices. They shred paper. They scan documents, whatever we need them to do. They go with me to events and help me sell. And I pay them, and they pay for the things that I can't write off as a tax deduction. So that's a huge selling point. Pay them, and then they can pay for the things that you can't write off. So then, in essence, almost everything you have can be a tax deduction if you want it to be. So in hiring your children, you can pay them $12,000 a year. They don't have to pay taxes on it. You don't have to pay taxes on it. There's no FICA, no unemployment, no state or federal taxes on the first $12,000 a year if they're under the age of 18. If they're over 18, you would just have to withhold FICA. So that is a huge deal. You do have to process payroll for them. So this is something we can help you set up. Now, one of the biggest things, and I'm most passionate about, if you know me, is social giving. And, I truly believe that we were put on this earth for something greater than ourselves. And that if we help enough people get exactly what they want, we'll automatically get what we want. And that Zig Ziglar said that. I've lived my entire life by that. But I think that what we're supposed to do is to teach more people so that they can save more, so that they can have more, they can live more. And then they can give more, which is true fulfillment, is being able to give back and helping people. And I live that every day. This is my mission statement. Teach more, save more, have more, live more, give more. And then I get to nourish more, which is provide safe drinking water and feed more children. And then I also get to free more children from sex trafficking. So it's kind of selfish that I get to do those things on a daily basis because I live my life every day trying to figure out how many children do we feed today? How many children do we free today? How many people did we provide safe drinking water for today? And then on top of that, how much money did I free up for people to be able to live their life and have what they want in life so that they too can see that sense of fulfillment. They can have more, live more, and then give more. So I'll explain this to you by giving as a social giving. It's allowing you to combine your passion and your profits together. And what we did is we started this 2 years ago, April 16th, 2018. And we decided that we were going to give from a gross income level. And what that did is that allowed us to pull together our passion and our profits. And so for every dollar that comes in our accounting practice, we provide a serving of whole food plant-based nutrition to children in need. And to date, we've been able to provide 2.7 million servings of food to children in need. So that's on average of 8,000, almost 8,000 children every single day. We're actually a little higher than that right now. And I'm super excited about that. But then we added on Operation Underground Railroad. So we work with Manna Relief and we provide whole food plant-based nutrition to children that are malnourished. We work with Operation Underground Railroad to free children. We free a child about every 3 days. We free a child. It's for every 25,000 that we bring in, we free a child. And then on top of that, we provide safe drinking water. And it literally costs $4.58 to provide safe drinking water for a person. It's nothing. So we give for every $150 that we bring in. We're actually providing safe drinking water for a person in need right now in Liberia, and we'll move on to other countries. So this is the last thing I want to share with you is how do you keep more of your hard-earned money when you start making it? Easiest thing, when you hit $1,000 a month in net income, when you hit $1,000 a month in gross income, you need an LLC immediately. Get an LLC, okay? It doesn't cost, it's a couple $100 plus a filing fee. We can do it. You can do it on your own. Go to Secretary of State's website. Once you hit $1,000 a month in net income, meaning after expenses, you need to have an S Corp election. So it's just an LLC that's then treated as an S Corporation. And what that allows you to do is bypass self-employment taxes, or almost completely. So you can bypass 80% of them. So in this situation, you're making 60 grand a year in income. 15.3% of that money would typically go to self-employment taxes. So you're paying $9,000 in self-employment taxes, plus you'd get hit with federal and state taxes. So in order to bypass this, you could pay $1,800 if you just had an LLC treated as an S corporation. And for $500 plus typically a $150 filing fee, you have an LLC treated as an S corporation. So that's one of the things I can tell you to save a ton of your hard-earned money is just get the LLC. Once you hit gross at $12,000 a year or $1,000 a month, once you hit $12,000 a year or $1,000 a month in net income, you need an S corp election, and that'll save you massive amounts of money in taxes. So real quick, start a home-based business. Or a business for that matter. I don't really care what it is. Start something so you can save money in taxes. Take the deductions that you're entitled to. Don't allow people to tell you that you can't take advantage of those. And I'm going to actually put a deduction spreadsheet here so you guys can take advantage of the deductions that we help our clients write off. Hire your family your spouse and your children for extra deductions. You can hire them and take fringe benefits as well. And then hire an accountant that understands your industry. Do not try to do your own tax return, because you're more likely to be audited. And at the end of the day, you're not going to have someone help you with that audit, and you're going to miss out on deductions. So, and if you have to argue with your accountant on taking certain deductions, you need to find a new accountant, okay? And then track the deductions that you're entitled to take. So these deductions, it's very important that you have some sort of software to keep track of your deductions. And guys, go out and share this information with everyone. People need this information today. People need to know how to free up money. People need to know how to put more money back in their pocket, and they need to know how to make more money. And I'm so excited. Like, I see Sherry Tree. I see her. She can't see me, maybe, and you guys can't see her, but she's going to pop up and she's going to teach you how to take it to the bank. So she's popping up next. So one of the things that I'm sharing here last, this is included. We're actually doing a tax strategy session for everyone who is a part of the Level Up and Network event today. And so you'll get a special link, but you can actually send this to others who you want to help out. And I'm super excited. Like, now we're doing referrals. And when you refer someone to us, we're actually going to provide nourishment for a child for a year. And we're going to provide safe drinking water for a person for their lifetime. So, if you need help, reach out to us. This is our book. And then Robert and I, and he posted earlier, we just launched a new book called What's Your Plan B? Why You'd Be Brain Dead Not to Own a Home-Based Business. And the purpose of this is to teach people that they have to have some sort of home-based business, and the massive benefits around it, not just making extra money, but the ability to be able to write your own schedule, all the tax deductions that go along with it. So you can definitely check that out. So, because the whole goal is to keep more of our hard-earned monies.